Hello, I'm Tim Hayes with Matrix Management Consulting. Great privilege to be with you today. I'm working with DiverseLink on covering some topics that are pertinent to you as a business owner. A lot of the material that we cover is very broad. We're very fortunate to work with very large companies and some companies that are emerging superstars. So at times we may share material that may be a tad bit below some of your experiences, but if you stick with us, I can promise you that you'll get some information that's critical to your long-term success, development, and growth. So we're excited to be with you today. Actually, we're going to begin in the area of personal financial management. Hopefully you've already downloaded the course and the associated material. We will have a PowerPoint loaded for you to also look at. So I will be referencing from the PowerPoint, but all the information is listed in the table of contents in the material that you will be studying from, and it will be very easy to connect the topics. If I use an example that is not listed in the material, I will reference that. And so, why start with personal financial management? Tim, I own a company. I'm not really interested in my own personal financial management. One of the critical things, and Bert, who is the founder of DiverseLink, and I worked together some time ago at SunTrust rolling out a program. Many of the companies that we work with had some type of federal or state certification that required some thought, especially once they became successful. And I'll use this as a wonderful example. I know of a company that they've grown from a one-person shop to now over 55. And the owner created a strategy that was to grow the business, but he also wanted to grow himself personally, financially. Over a 20-year period, we had to then begin to do analysis of, wow, if I'm not mindful, I will grow out of the 8A program. I will grow out of the SWAM program. Why? Because they were not looking at their personal financial statements and their personal development and growth in concordance with what their business was doing. And we had to really spend some strategy time, because if not, they would then outgrow a program, which was then almost 75% of their business. So again, a lot of the personal financial management is not just, we'll cover things like, do you have a budget, those type of things. But again, those are some of the larger strategies that we really want to help you to think to and think through. Okay, so let's begin. So we are on slide number 1. On the first slide, and just some key foundations thoughts. There is no difference between your company's financial viability and your financial viability. Now, if you are fortunate enough where mom, dad has created a company and I can walk in, that's great. But even with that process happening, eventually a day will arrive where people will look at me. Great example. I'm helping a company right now, did an acquisition, owner forgot to kind of take care of some things personally, hit a significant slump in sales. The financial statements and a collateral for the loan would indicate that they're eligible for a loan. Guess what? Can't get it. Personal credit history indicates not a reliable resource of payment. If he won't handle that in his own personal resources, how will he handle the company resources? So again, we try to really focus on the fact that you and your company are one. And as the company gets larger, as we mentioned earlier, it becomes an orchestra where we all have to play together. And last little point is shoes are for shoe boxes. So often I find an individual where we're very organized here, but man, when it comes to creating my personal strategy, it's in a shoebox. And so we have to take the same level of discipline in ensuring that we're covering our processes personally as we are our processes from our business perspective. The next slide talks about personal accounting. And a lot of this is just basic. I mean, there are so many processes, and I can use my wife as an example. My wife is not a technology buff. So she actually uses an Excel spreadsheet to run our house with, but she's good at it, and so it's all about what's the fit. You have automated systems, and I'll use as an example. My parents are older. My dad's 91, my mom's 88, and so I'm having to kind of take over. So one of the softwares that I use for them is QuickBooks Online, small monthly subscription. I'm able to download, see all their activity. Dad, why'd you spend $800 with Costco? What'd you buy? So we do that, and then last but not least is the outsource process. As your company grows, it becomes far more important to have someone managing you personally. And we'll talk about like some of the different areas that can happen, because in most instances, we want you in your sweet spot. If it's chief creative officer, project leader, whatever I do best in my company, that's where I get my biggest return on investment of my time. We want you focused on that. So as you think about your personal accounting system, you got to be really, really clear and really, really true to yourself. Am I just happy that things are just kind of moving, or do I need to really make a change? And so, there are many automated systems out there. I personally don't really try not to endorse anything, but we know there are QuickBooks, Sage, Peachtree. I mean, it's just many different types of accounting systems, and last but not least, Excel. Okay, so we'll move to our next piece. And again, this will really resonate with you from a business perspective, because I tell people, I believe that if there are problems at home, I bring them to work, and it really impacts my performance. So if we can get in the habit of treating ourselves like a business, our performance will change. And we've often seen, what was it, Stephen Covey, The 7 Habits of Highly Effective People. I am, even in my finances now, we're kind of going, okay, what's the game changer? What do we do to make this move and make tremendous things happen? So guess what? This is not real complicated. From a personal perspective, what are the key transactions? Income, expense. But here's kind of where at times we forget, and as business owners, there's a deeper strategy that we'll have to begin to talk about. We get it. All of us get a paycheck. All of us have to pay bills. But as a business owner, how do I create a strategy around the asset of my business, my asset, and my long-term goals? So how do I save more effectively? Like I'm working with a client right now, doing really well. We don't like the tax liabilities that are kind of showing up. So we said to the CPA firm, hey, we need you to do an actuarial evaluation of what happens if we put in a profit sharing program for executives. What happens if we include middle management? What happens if we include staff? How does that look? How does that impact? So the question becomes, personally, how does that impact my ability as the owner to save? How does that, increase the morale, at our team? And so we want to always look at that. And then last but not least, in areas, investments and insurances. A tidbit I learned just yesterday. As I mentioned earlier, my dad's 91. My insurance guy said, well, can your dad become part of your company? I'm like, well, why would you ask? He said, because, hey, here's the reality of it. And this, we're talking about insurance for a second. Long-term health care can be paid by a company for an owner, and it's totally deductible. So those are the kind of things that, you've got to create a synthesis between me personally, and then also me, and also my daily business activity. So again, these are the things that, although they seem foundational, they seem rudimentary, there are so many different rules, laws, and regulations that will produce opportunity for you to reach your financial goals. All right. On the next slide, I kind of call this one look before you leap. I had an uncle, his comment always was measure twice, cut once. So, and I think that so often as entrepreneurs and business owners, we are accustomed to acting, then reflecting. Okay, hey, we've got to do this. Oh wow, why did we do that? and that is part of who we are. Hey, let's grab the bull by the horn, ride this thing, and wherever we end up, we kind of end up. But I just again have some recommendations, and again, there's this dual role that we kind of live in of business world, personal world, and every time we do something, what are the cash implications of my decision? It may be, I've worked hard. I deserve that. And because I deserve that, I'm going to do this. Wonderful. That's wonderful. But if we hit a cycle that is slow and I've had to take a capital distribution or something from the company and I deserve it, guess what? Somebody's got to pay the piper. So always think about what are the cash implications of our decisions. Next piece, what are the tax implications of your decision? As an example, we have a 19-year-old, first year of college, and I had to make a decision about, okay, do I put him on payroll? Do I not put him on payroll? And we made a decision to put him on payroll to get him to help me do some things. Well, it worked out phenomenally well in that then he had cash to do some things legally that he needed to get done, but I had the tax benefit of doing a write-off. And the difference in cash between the difference in taxes saved me a bundle. So those are the kind of things personally, because again, he's personally in my household. He's a personal deduction. So how does that in fact affect my tax implications? And then last but not least, always try to understand, even from a personal perspective, what are the human capital implications of my decision? One of the first lessons I learned is I have to be self-aware as to who are my employees. I had a friend, and this is kind of how I got started, and had a friend, and he worked really, really hard. And he desired a certain type of car. Well, he made his money with people that were doing much needed, very rudimentary type services. So you didn't have to have, a rocket science experience to do that. So he went from driving a Dodge Neon to all of a sudden, bam, he jumped to a four-door Mercedes. Now, he earned the right to do that. So he made a human capital, his human capital decision. But the challenge was on his business side, people kind of went, well, hold on a second. If he can do that, why can't I get a raise? So again, those are the things that we kind of, at times we don't often think about a person's psyche that man, a 10 cent or 15 or 20 cent raise makes a difference. I pull up in a brand new Bentley, which is great, it's great. But there could be some significant human capital issues that we face when you go, wow, I'm making 12% above minimum wage. Last time I checked the oil change on the Bentley is like $5-6 grand, and you struggling to give me a 10-cent raise. So again, that's what we really want to talk about from a personal perspective. That then bleeds over into that. And my comment to him was, man, keep the car at home. Just keep the car at home. Get you a nice Chevy Impala, Bluetooth, everything you need, and it'll handle itself from there. And people being people, will be happy that you're with them. So that's kind of our look before we leap slide. Okay, a lot of this piece, one of the things I really want to qualify is that in this area, I am a generalist. Diverse Point and myself and others, we know specialists in this area that we're about to cover. You just can't take this video and implement everything you hear without getting professional advice. And so we're going to start talking about insurance benefits and these and those type of things. So you're going to need to make sure that you hear, but also align and assess what you're hearing to your personal needs. Because I mean, this is, you may be $1 million business, you may be $100 million business. That is a wide gap. So we're going to kind of go from there and look at a few items. So the next part is, we call it creating a solid foundation for your financial plan. I use the terminology compensating yourself while not strangling your company. So often, and I'll kind of use, although these are not exactly businesses, they're treated as businesses. A lot of times when I work with them, churches. You will find a church where one guy makes like 82% of all salaries. So from an external perspective, how does that look? How does that feel? And eventually we'll get there, but how does that feel to someone that needs to provide capital to the company? Wow, do you value your people? Are you that great? So how do you create a salary structure for yourself that is really open to reward you for your success, but also it doesn't strangle the company? Often I see business owners, they've worked hard, they have every right to do it, and then they go, their comment to me is, for me to get that, my salary must go to this. And I'm like, okay, we can do that. But are you comfortable in ensuring that your salary can really be supported at that level? And often, the salary rises, then it drops, and then what happens? We start taking capital distributions to make sure I keep the payment going on that item that I just purchased, and we go from there. Bonuses. I really like the bonus model for a couple of reasons. Bonuses, they incentivize me as the owner, but my people see that I am incentivized as the owner because, trust me, everybody knows what you make. The back room is not that silent. And they kind of all know, well, man, do you know what, John makes? And, they'll use roundabout numbers. But everybody gets a sense of what you make. Or what can happen is, I saw this once, where a company had a contract with a locality. A locality did a write-up on the company, and some groups complained about it. And they said, well, just, it's public information, just pull the contract. And in a set number of days, they made a significant amount of money. But the issue was, oh, wow, so like, what are you doing with the rest of the money as the business owner? Well, as the business owner, there are many costs that people don't quite get. So often there are many ways people can back into your salary. Bonuses we love. Now, one of the great things about bonuses that I just bumped into recently is you may have had an outstanding year. Now, we'll talk about this in another setup, is that the structure of my company. A lot of people now going to subchapter S, LLCs, where we make a lot of money here in my business and it passes all to me, and now I'm responsible for the tax liability. Well, one way, not the only way, is if I'm stuck with a big tax liability, I can often declare myself a bonus, pay in some additional taxes, not have to pull all the cash out, but it then allows me to then lower my tax liability. So bonuses can be really used a lot of different ways. We talked about insurance benefits. Insurance benefits. In most instances, if I use debt of any form and I'm a key person in a company, guess what? They're going to require me to have key man, key woman, key person, life insurance. Because the thought is that if something detrimental happens to me, how does the business continue? So again, you want to get with your insurance agent, broker. And one of the things I really have learned is I have a gentleman that I work with, and he is very creative. He never brings me a single solution. He always brings me 2 or 3. How do I do this? Well, you can do this, you can do this, and you can do this. There's never this sales pitch of take this product. It's more about here are 3 options. Well, what happens in this one? What happens in that one? And as an example, we were just day before yesterday, we were talking about health insurance. I said, so like, how does the plan differ between a flexible spending account and a HSA? And so we had to kind of walk through the whole piece. And at the end of the day, the answer was don't change anything, but at least there were options on the table. And I think critical, again, from my personal financial perspective, is how do I increase my cash in pocket while allowing the business to pay things out of its pocket, therefore reducing my tax liability. Distributions and dividends. Distribution and dividends. This is an area that can get a business owner in trouble really quickly. There is a strategy behind the fact that there are times that I can take distributions and they are taxed. They're taxed at a different rate at times than my own personal liability. Sometimes I can take distributions and they might not be taxed at all, just depending upon the amount. But traditionally, there's a tax implication of that. So great, I'm getting the free cash flow that I need, and on my personal side, and go from there. But often one of the challenges are, and we'll look at some key performance indicators later, where one number called capital distributions is part of a ratio that can dramatically impact your company's ability to access capital. I've seen companies where they take so much in capital draws, the company's net worth is negative. So great, I'm doing dividends, I'm doing capital draws, but am I really helping myself? But at the same time, am I really helping my company? And last but not least, at least on this slide, is leasing income of property owned. I don't know how many of you actually own a facility or are thinking about owning a facility. One of the great strategies I've seen used recently is a lot of people may use, and we'll talk about different sources of debt. SBA, Small Business Administration, is a huge provider of capital. So what do? We go out, we buy a building, we put it in a separate LLC. Guess what I do? And then I own it personally. Or I own it in an LLC that I own 100%. So let's just say I am a printing company and we need a new location. I can then set up a LLC called Printing Company LLC Alaska. Put that building in that LLC. Now I am the 100% owner of that LLC. The printing company then leases that space, that building from me. So what have I done? I've created an expense on my business side, and then when it's time for me to exit and sell, guess what? I'll sell you everything other than the building, because that then creates a great cash flow income stream for me, because if I'm not working, more than likely, I'm not earning at least like I used to. So again, these are just some of the solid plays and thought processes in the material. There are many more options to look at. The material is very in depth, but again, I want to stress. As you can kind of see, business and personal is a symphony. You've got to work, you've got to follow the conductor, which is often the IRS. Our great friends at the IRS. But there are notes and things that we can hit to soften the impact of what can happen to us, via the IRS. One big thing is, the next slide, we want to talk about just quickly developing an investment strategy. Now, as a business owner, people kind of, we often see investment firms, what is your investment strategy? Well, as a business owner, our investment strategy has to be really, really different. And as I mentioned earlier, we have companies that have specific certifications that not only do I have a sale size issue for my company, but if I grow too quickly, too fast, guess what? I'm going to make a mistake of earning too much, having too many assets. So I then lose the big engine that I have called my business and its certification. So I think the big thing is, the number one thing is, you have to really kind of understand, what do I own now? I mean, what do I really own? A lot of people want to talk about the value of their company. Well, it's only a value of a company when somebody's ready to buy it. So when they're ready to buy it, then that's a real value of it. But really look at, what do I really own now? If I don't own anything, it's totally okay, because who knows, my business may own everything, and I use it that way. But at the end of the day, I still have to recognize, what are my investment goals? What's my strategy so that my kids won't have to kick me out of the business? I can leave when I'm ready to go, because I've created a strategy behind that. So, is it, I see some owners use free cash to do rental properties, because their comment is, hey, people are always going to rent. So on their personal side, on the business side, the business is doing well. Their net proceeds that are coming home, hey, I can limit my cost here, so I'm going to create a huge real estate portfolio that, again, once I've left, my kids have pushed me out, I'm still making the same money, and I can go by and give them a hard time. A lot of it, too, is determining your risk tolerance. And again, these are just kind of common terms that we hear advisors speak of. But, how much risk am I willing to put out there? I remember my oldest boy now is 19. And so we created, I won't put the fund on blast, but there was this company, well known, and we put some dollars in, and wow, did it not grow. And I didn't have enough forethought into my risk tolerance to go pull it out now and create a tax savings a prepaid plan, 529 plan. Well, about 4 years later, I'm thinking, man, it's going to be worth 4 times what it is now. I could pay everybody off. Guess what? It went back to zero. So I did a really poor job in kind of saying, you know what, just pull that gain out, pay the tax on it. I got one kid through college. If it happens again, great. But again, it's really critical in kind of monitoring, your risk tolerance. And then last but not least is just making sure that you are aware of what's happening. And that's what happened to me in that fund. I was not doing any reading on the management. I wasn't reading the annual reports. I wasn't doing anything. I was just oblivious to the dot-com bubble. I'm like, I'll be a millionaire in like 2 years. But didn't quite work out that way. And a lot of that was just because I wasn't really paying attention to what's going on. So again, it's and so often I see business owners, especially family-owned businesses, where we give our all to the shop, but we kind of leave our stuff in a shoebox, and we just always believe that it's going to work out and it's going to take care of itself if I can get this to work. But the only thing about it is that time doesn't stop for anyone. So the real key is we want to just make sure that you're planning. All right, so we're going to let's go to the next slide. And this kind of continues this thought, is really planning for your exit. Really planning for your exit. So, so when you leave, so does your salary. And especially in an environment where you have put your blood, sweat, and tears into it, and then all of a sudden it's not there. And for those of us that have kids that have kind of gone on, whether to college or a career, you're kind of waiting for the call. Hey, do you want to go to? Hey, and then all of a sudden it's like, you know what, Dad, I'm busy. would love to go with you, but I got my own life now. And so you really have to kind of approach your exit of that same way. You know what? It might not say, when my child leaves, what do I do? But hey, when this salary is gone, what I'll do, and I can guarantee you will ask yourself, what did I do with all that money? You know, what happened to those millions of dollars that kind of went through the till, and I only have this, and there's a whole bunch of things. So, you know, big piece is just make sure as the owner that federal and state and local taxes are getting paid and paid properly. That's something you really, and that's why, you know, it talks about a personal piece, but it's all about Social Security. I'm working with a company right now that they were in an area where the infrastructure was undergoing a massive expansion. They were right in the middle of it, and the economy just kind of ground to a halt. Well, they made a decision. It wasn't a bad decision, but I understood what the decision was. But it was like, hey, we're going to pay everybody but the IRS. We're going to pay everybody but the IRS. And so a lot of that had to do with their bond rating, because if they didn't complete the project, the bond rating was going to get shot. So they made that decision. And oh, wow, they are suffering for that decision now. And they're working their way through it. But the greater impact, too, is that as from a business owner's perspective, if I am the person on the line, guess what? That can actually pass to me as a personal liability, let alone the long-term implication of what I thought was going in that was going to work to my benefit is no longer there. So you just want to make sure you do that. Please really look at pension plans. Now, pension plans can be a little bit different. Often with general pension plans, they are for the entire company. You know, so if I'm going to offer a pension plan, I can't always pick and choose who's going to be offered to. But if I do a self-employed retirement plan where it's kind of just mine, you know, and getting the right information and right strategy, that then allows me to kind of create my own nest egg, you know, to the side. So, and it's really, really critical, because so often, I remember we had a meeting a year ago about this time with a company we were looking to acquire, one of my clients I work with. And the guy kind of said, hey, I walked in, I saw an opportunity. And he was right, it was a tremendous opportunity. But now he can't get out because he took all of his retirement dollars and everything and went in and bought this company thinking that he could ride it up. I'll sell it and I'm out. Hadn't worked out that way. So again, you got to always think about, you know, that next acquisition. Do we really need to open that new office? And then how does it affect me personally, not so much the company? And so that, again, in the material, there are many more options listed. You know, and I don't want to get in an environment where I'm just regurgitating what you're seeing on paper, what you're reading right now. But we're just trying to kind of make this interactive for you. Big piece is, and this is very, very basic. Just two types of life insurance: term versus cash value. A lot of that will really determine on what fits your need best. You know, term is, hey, I pay, I die, I get paid. Cash value policy is, I pay, it increases in value, I may be able to access the cash, I die, I get paid. Now, one of the big differences in term, and we'll talk about this also as you kind of move forward, is that the cash value can, especially in early stage companies, can serve as a tool to be leveraged to start a new endeavor. Or, hey, you know what? Hey, it's been great working with everybody. I've got a sense that in this, what I'm seeing, there's an opportunity here. Well, where do I get the capital from if I'm all in on this business? How do I get capital opportunity for item B? So the big piece is just knowing the difference between term and cash value policies. Preserving wealth to your heirs. This is a real issue. I know a gentleman that his tax rate is 50%. When you look at, so he earns $100. At the end of the day, he pays $50 in taxes. So one of the big pieces is, how do we really create an environment where his business can continue? I serve on a board where there's a family. They have children. They require their children to leave. You cannot work here. You have to apply for a job after you've worked elsewhere for 5 years. Then they make them buy into the company to make sure this is what they really want to do. So even as you kind of think about, okay, hey, I've got a son, I've got a daughter, they're interested. How do I get them the business in the most effective way that assures me that they're in it to win it, not just to ride the wave that we've created? But how do I do that? Or can I do an ESOP in that employee stock option plan where, I got a great bunch of people, man, they love where they work. I want to reward them for their hard efforts. How do I do that to make sure that, I'm protecting what we've built? And then how do my kids, it could be aunt, uncle, whoever that you deem to be your heir. Estate planning, there's a lot of conversation now about the death tax. I work hard, I accumulate all these assets, I've already paid taxes on it. Now I die, and then my kids have to pay a tax to get access to it. So I'd really recommend that you, again, look at all that. Now, just think everything that I've given, you got to do your normal, 7 a.m. to 10 p.m. job. So then you got another shift you got to start now from 10 p.m. to midnight because it's just so many things to do. But the critical thing to understand is that, hey, we've at least talked about how how your personal financial management is just really, really critical to think, because so often we're focused on just our development and our growth. Also included in your material, you'll be able to download 2 exercises. One is called the debt to income ratio calculator. It's a really great tool that allows you to plug in your debt to your income. And then, there are groups like Risk Management Association where all these parameters have been created as to deem me, hey, am I risky or am I not? The great part about that tool is that it will allow you to plug in your income, plug in your debts, and it gives you a risk rating scale at the bottom. Hey, am I in great shape? Do I have good credit, questionable credit, and high risk? Now, we all know the whole industry around mortgages and underwriting have gone through some major renovation and rehab, as I would kind of call it. But that debt to income piece is just critical. And again, don't forget, we are talking about me as a person, you as a person, but that's also hugely impactful on our businesses. And last but not least, it's just a basic household income, household budget. It's just an easy tool. It's an Excel spreadsheet. And again, it will allow you to plug in your numbers and just kind of give you a great platform to work for. So again, it's been a privilege to present this information to you on personal financial management. As we as Matrix can be of assistance to you anyway, please contact Bert, contact us, and we look forward to working with you in the future. Thank you.